Hello everyone, my name is Diandra Adani Mazaya and I am from Master of Business Administration at Institut Teknologi Bandung. In this video, I will represent you the final exam of accounting that covers the financial statement and managerial accounting report analysis. Enjoy watching this video and let's begin. This is the presentation for the Financial Statement and Managerial Accounting Analysis Report for PT Ultrajaya Milk Industry and Trading Company. Now let's begin from the company profile. PT Ultrajaya Milk Industry and Trading Company was established on 2nd November 1971 and listed in PT Bursa Efek Indonesia since 2nd July 1990. These are the listed products of PT Ultrajaya Milk Industry. We all know the Ultrajaya has so many known products such as Ultra Milk and Teh Kotak. And these are the two most known and most popular products that is listed in the market right now. The company has the vision to become the best and the largest food and beverage industry in Indonesia through consistently prioritizing consumer satisfaction and highly upholding the stockholders and business partners' trust. And the mission of the company is to conduct business based on the high sensitivity, consistently orienting to the market and consumers, continuously maintaining environmental consciousness, with the end goal of optimally conducting business to achieve value-added performance to our shareholders. And the company's core values are the inspiration for all behaviors and activities conducted by the people. Values such as customer satisfaction, product quality, and upholding business ethics from one basic guidance and symbiotic philosophy within the company. As per December 2020, the highest composition is held by Sabana Prawira Wijaya with 43.98%, followed by PT Prawira Wijaya Prakarsa. Now let's begin the financial statement analysis based on the financial report of 2020 to 2021. These are the key financial highlights conducted from the financial statements such as balance statement, income statement, liabilities and equities, and cash flow. The net income of PT Ultrajaya increased by 11% compared to the previous year, indicating more profits and resulting increase of earning per share up to 17.6%. For the cash and cash equivalents, there seems an increase up to 17.9%, giving higher liquidity to the company. And lastly, for the liabilities, there's been a 2.49% decrease, mainly due to the debt and interest that has been paid off from the previous year. And based on the financial statements and report, we can conduct ratio analysis based on its profitability, solvency, liquidity, and also activity. The first one is debt to equity ratio. The debt to equity ratio shows that the company has 0.416 units of long-term debt for each unit of owner's capital in 2021. This number also depicts the company's dependency towards borrowing money from other parties. The lower the ratio, the company should have more independence to operate with only shareholders' funds and not relying too much on external financing. Hence, with Ultrajaya having less than 0.5 debt to equity ratio, it has a middle to low amount of debt compared to its support from shareholders. The current ratio shows that for every 1 unit of current liability payable, the company has 0.05 units of current assets in 2021. This number can be considered as high, which means that Ultrajaya has more than the capability to pay for its short-term liability by the current assets. It also shows that how the company has little trouble in facing financial obligations by managing the current assets and liabilities. And the third one is return on investment. Return on investment is usually used to evaluate the effectiveness of investments and how favorable it is compared to the cost it spent. The higher of return on investment percentage, the more efficient the investments are, with many gains follows. From the calculation of return on investment in June 2021 and December 2020, there has been an increase by 0.33%. This could show that compared to its previous year, Ultrajaya has improved its finance performance in terms of investments worth. And the last ratio is the stock turnover ratio. The stock turnover ratio indicates the efficiency of inventory investments when converted to sales. This ratio could help to determine the stocks needed for future inventory needs, avoiding the chance of overstocking and overvaluation. The higher inventory turnover number, the better the sales being made by units of investment in inventories. From the results in June 2021 and December 2020, there has been an increase up to 13.3%, presenting a rise in sales conducted by inventories. This also indicated the effectiveness of inventory management. Yet, high ratio numbers should also be supervised, or there could be a shortage in working capital. One of the elements of manager accounting is cost behavior. Cost behavior is a relation between specific costs and its changes towards the company levels of a company. Generally, the behavior is classified based on two things: its relation with the production, such as indirect costs and direct costs, and its traceability, such as fixed costs and variable costs. Indirect costs are costs that indirectly tied to cost objects and production activity. The indirect cost of Ultrajaya reached the total of 488 billion rupiah in 2020 and a 16% decrease to about 409 billion rupiah. Despite facing the pandemic, Ultrajaya shows its ability to adapt with declining condition, pressing operating expenses to maintain its stability in receiving higher profits. Direct costs are costs that are directly linked to the production activity of the company. The direct cost of Ultrajaya reached 2 trillion rupiah by 2021 and 1.9 trillion by 2020. An increase on direct production costs went up to 6% due to higher costs in direct materials. Despite its bigger costs, Ultrajaya managed Despite its bigger cost, Ultrajaya managed to allocate at the cost, resulting a better net income. The next is fixed costs. Fixed costs are costs that stays consistent regarding the levels in activity and units sold. The total fixed cost of Ultrajaya has increased mainly due to the amount of accumulative depreciation, despite the decrease of rent, insurance, and interest from bank loans. From the calculation of 2020 and 2021, there has been an increase up to 5.26% from the previous year. Next is variable cost. Variable costs are costs that change depends on the level of activities. The total variable cost of Ultrajaya has decreased mainly due to the deflation of supplier costs. Based on the calculation of 2020 and 2021, there has been a decrease up to 5.46%. And the total cost is the sum of the variable cost and fixed cost that is used by the company to forecast the expenses of the production and operation. The total cost can also build strategy and management depends on the amount of total cost. Based on the total cost of 2020 and 2021, there has been a 0.2% of decrease, which means that the total cost of PT Ultrajaya has been stagnant and stable. And this is the conclusion that I conclude from the analysis of financial statement and managerial accounting. The first one is that PT Ultrajaya has stable financial condition. With no significant changes in the ratio analysis, Ultrajaya is considered to have stable financial condition despite the pandemic. The second one is the effective cost management. Ultrajaya has managed to improve the net income despite higher fixed costs, mainly by suppressing indirect costs, resulting less total cost in 2020. But Ultrajaya has improving performance based on the 2020 and 2021 financial report. Ultrajaya has improved its cash, net income, earning per share and assets while lowering the liabilities. The company shows better financial performance than the previous year. And these are the improvements that could be conducted by PT Ultrajaya for future years. The first one is to avoid accumulating bank loans. PT Ultrajaya has so many bank loans that can be burdened to specific years. So it's better to spread it up for every year. And the second one is to reduce fixed costs. And to reduce fixed costs, PT Ultrajaya should pay off debts and liabilities faster to avoid higher interest. And the third one is to make and the third one is to maximum and the third one is to maximize production. PT Ultrajaya has high maintenance costs, and it's better to sell off old inventory and invest in better quality inventory. And that's all for the presentation of financial statement and managerial accounting analysis report. Thank you so much for watching and salam cuan.